Hey, good morning, everyone. Screen share is active. Sound should be active too. Just a quick reminder, it is a live broadcast, so if you're using any other resources that require your internet bandwidth, it is always worth shutting those down. It's Monday, the 18th of August, 2014. We're about halfway, more than halfway through this month now. More than halfway through this month. On the economic calendar this week, not a great deal going on until probably midweek. I think it's definitely a week for central bank watch. Got to keep an eye on what the central banks are up to. On Tuesday, we have a release of the monetary policy meeting minutes from the Reserve Bank of Australia. Wednesday is going to be the big one. Wednesday is going to be the big one, right? We've got the Bank of England on tap with the release of the voting pattern for the bank rate. That has been unanimous up to date, right? So every time the Bank of England's Monetary Policy Committee has met for the last 7 years, the voting pattern has been unanimous to keep interest rates on hold. And I think if you're looking at the current state of GBP USD, I think the market has had just about as much forward guidance as it can handle. Right, so the price has been accelerating north. This is the second year that it's been doing that, and it looks as though the market's had pretty much enough. So there needs to be some substance behind that forward guidance now. Hey, okay, so I'm just getting a message from Sadiq saying that there's no sound. If anyone else can just tap the keyboard and confirm, yeah, okay, right. So it's a problem on Sadiq's end, right? All right. So I think market participants now are really looking for substance now behind what the Bank of England has been saying. There needs to be some substance. If the interest rates are going to rise, then for lack of better words, and being a trader, it makes you very fluent in French amongst other languages, but go ahead and freaking do it, right? If you're going to raise the rates, go ahead and do it. Don't just say you're going to do it. Or I think forward guidance in the UK, it has been the same as forward guidance from the Fed. It's been pretty much a mess. You lay a criteria saying, well, it's going to be based upon unemployment falls. So you change the goalposts. And it looks like from the last inflation report that those goalposts are starting to change. A couple last month, Khan was saying at a speech at the Mansion House, the market has it wrong. They're thinking 2015. It could be a lot sooner than that. And here we are at the last inflation report, and saying, well, it might be a little bit later than what the market's thinking. So, not really surprised at the fall in GBP USD and across the cable crosses. Not really surprised at that, and I think that that is something that can continue right up until the point that you actually see a raise in the interest rates in the UK, right? So it's not really time for forward guidance anymore, I think, as far as market participants are concerned. It's time now for some substance behind that. But we'll take a look a little bit more at this cable chart in a little while as far as technical trading is concerned. That's just maybe an introduction to the fundamental picture, or certainly one particular view of it, the most important one, which is mine. Um, Also on Wednesday, we have the FOMC minutes, right? So they'll be released 7 p.m. UK local time. We've not really had, I think a little bit of a pattern has developed with the FOMC. So the one with the press conference, that one tends to cause uh, a reasonable amount of volatility, as you might expect. And the one that comes without a press conference doesn't appear to do very much. So this is the one without the press conference. I'm not expecting a huge amount of volatility. Generally speaking, the FOMC announcements tend to be the less volatile affairs. Every now and then one comes along that causes the price to fly around the screen. But most of the time, that tends not to be the case, right? So we're not expecting it to be a much different this time around. Thursday sees the beginning of the taxpayers' paid holidays for central bankers around the world. They're all meeting up at the Jackson Hole Symposium. Friday, I think you have to watch out a little bit. You have Yellen speaking at about 3 o'clock in the afternoon, and that's followed not too long after, about 7:30 p.m. in the evening, by Draghi, right? So just in case they have anything critical to say, again, not really expecting it to be the case, but when you do have key heads of central banks, giving speeches and on these kind of speech engagements, you do have to watch out just a little bit, just in case, right? But they tend to be quite well, they tend to position themselves quite well, right? So, Draghi, he usually saves any kind of critical remarks for his press conference following the ECB decisions usually, right? So it's unlikely that they're going to indicate a huge shift in ECB or Fed policy at this particular meeting, right? But keep an eye out just in case. So those are the events to be monitoring. So Tuesday is the RBA with the release of their minutes. On Wednesday, I think really the one you've got to keep an eye on is the UK MPC voting pattern. We're looking for some dissent in that. Failure to get any dissent, and I think you'd probably be seeing table a lot weaker than how it is looking now. But if we do get that dissent, then for all intents and purposes, I think we're going to start seeing table board again, and it could become very, very exciting as a result of that. And the week wraps up with Yellen and Draghi's speaking engagements. We're not expecting a huge reaction. We don't expect them to kind of kick off fireworks with their statements at Jackson Hole, but just in case. All right, let's turn our attention towards the charts. It's very much a mixed bag this week, somewhere between what's tradable and what's not. We've had a very, very decent run. If you've been following my trade notes over the course of the last 8 weeks, it's been quite fantastic. It's been quite an amazing run of trades. So a little bit of caution at this stage, being in the middle of the month, with a lot of months not even having established a clear direction, right? So if you're looking at a lot of pairs across the board, you'll see some where the monthly bar, it's established quite clearly a bull or bear direction, and we're seeing others which are still hanging around the monthly open price, refusing to break. So the first one that I'm looking at this morning is the GBP USD, and as far as the near-term sentiment is concerned, I think the sentiment is quite obvious there, right? So there's been a strong push in the bearish direction, a very significant bearish correction here in this instrument. The price has fallen from the high to low, almost 500 odd pips. So I'm actually looking for a continuation of this bearish sentiment, and I'm going to continue to look to the downside until I don't have reason to do that, right? So in the near term, I think that the bearish sentiment is being defined by this wall here. All right, so we're seeing that goes all the way back to April this year, right? So we have April lows, we have May lows, and so what you're looking at is support, a little support here, any kind of sharp pullback to that level, and that's coming in maybe 67.60, 67.80, something like that. But I'd look to short that level, and I think as long as the price is able to remain below that wall, I would consider bearish momentum to be intact on this instrument, and why not look for a push back towards the yearly open price that comes in around the 65.60 area, right? So for the time being, I'm quite happy to believe that there is still room to the downside on this particular instrument, particularly if we go and hit that level at some point today. I think if it becomes Wednesday and we're going and hitting that level, I'd want to see what's causing that reaction. So if you go and get a sharp strike on the underside of that wall on Wednesday, and you're seeing that there was a shift in that voting pattern, a little bit of caution, right? The price will be doing it. At that point, you might as well start expecting for that wall to be breached, okay? But if I get a move up to that wall today, there's no reason why I wouldn't be shorting it. And if you need a confirmation of that short, you just wait for a 30-minute bearish bar or an hourly bearish bar, and that should be good enough to allow you to define risk and to look for further downside in this particular instrument. All right, so I think it makes a nice clean clear level. Any break above that, if the price is above that, then I would consider at that point for the bearish bias to be invalidated and sit aside, just wait for price action to develop before deciding on the next course of action. All right, so in the near term, looking for a continuation of bearish momentum on GBP USD, and that would be from around the 67.60 to 67.80 price handle. Right, just looking for a technical play there, support and resistance at that particular price handle. If you're looking for something sooner than that, because these levels they don't always strike, there's the weekly open there, and you just got to wait for the price to go and give you a 4-hour close below that weekly open, and you could use that as a gauge of sentiment. If the week's turned bearish, then at that point, no reason why not to look for a continuation to the downside on the instrument at that stage. Why am I not buying GBP USD structurally? There's no reason why I should, right? So, if we see a break higher on the instrument and we start seeing support structures being established and we start seeing resistance turning to support, at that point, there would be structural cause to start buying the instrument. Right now, structurally, it does remain actually bearish, right? So until a structural change occurs, I'll just look for the bearish setups. And once we get that structural change, at that point, we can start looking for bullish setups on this particular instrument. So as far as the analysis is concerned, in the near term, we continue to look for weakness on this particular instrument, and I'm believing that there is further room to the downside. Okay, what else should we have a glance at? Euro USD, right? So Euro USD probably the messier of the majors Not a lot of price movement this year. We've been a couple of hundred pips above the yearly open and about 400 pips below the yearly open. She seems to be moving pretty much. She seems to be moving pretty much side to side, right? So some caution on Euro USD. But if you're looking to define the bearish sentiment on this particular instrument, I think that the area that you have to have marked is this one. All right, so there's a cluster there, and that cluster is coming in somewhere between 34.20 and 34.50. And so what we're saying is that so long as the price remains below that cluster, we would consider the bearish momentum intact on this particular instrument, right? And only a break up above that, you consider, hang on a second, there's something not quite right. And at that point, you might consider that the bulls have taken charge. So for now, I would hold off buying the Euro USD, right? I'm really not interested in buying it. Like I said, structurally, it's very much the same as GBP USD. There's no structural cause to be buying the instrument. If anything, what the chart is saying is that the bears actually remain in charge, even if the price ends up rallying 100 pips higher from where she is right now, right? So until you get that structural change, you really don't want to be a buyer. Rather, we would look for any sign that we're going to get a continuation of bearish moves on this instrument, rather than to be looking for those bull moves. What else do you want to be marking on here, right? So we want to define the downtrend. So you might even find something like this going on. Right, so why not to suspect something like that? Okay, that maybe there's a channel forming here. It is a predictive channel, right? It's still not confirmed that it is a channel, but it's not unusual when you have channels like that the price will fall in that channel, move sideways until it hits the upper wall, and then collapse to the lower wall of the channel, right? So some kind of price expectation there for the Euro AED, right? It is very general, right? But not necessarily tradable either, but always good, always good to have a viewpoint rather than to have no viewpoint at all. So that's the Euro USD. Okay, Aussie dollar. Aussie dollar, she spent pretty much the best part of, she spent the best part of 2012, 2013 in a bear trend. And for the time being, I'm kind of refusing to believe that bear trend is over. I'm refusing to believe it. And so I'm looking for a continuation in a bearish move. I'm looking for continuation to the downside in this particular instrument. Now, we do have the RBA on tap on Tuesday, right? So I guess that's going to be closely eyed. But in the near term, again, I'm quite happy to be charting this instrument, looking for those bearish moves, right? Or looking for bearish entries. And to that end, what I have marked on my chart, I'll get it in screen, is something like this, right? So we're just connecting our lows here, and I've actually got two walls here. Right. That's the first wall. That's the second wall. All right, so I'm looking for a continuation to the downside. I'm looking for AUD USD to be actually sub 90s and well into the 80s, maybe back to the mid 80s even by the end of the year. The only question which I have, or the critical question, is whether that is something which is going to happen, whether that's something which is going to happen from here, or whether we're going to see a deeper correction first, right? So charting both of those scenarios, in the near term, any kind of push into that handle, and I would look for shorting opportunities in the mid 93s, right? So that's coming in around about 93.50, maybe in line with that cluster here, maybe even, right? So 93.40, between 93.40 and 93.60, but certainly a strike on the upper wall. I would look for a shorting opportunity in this instrument. I think it'll make quite a clean technical play, a low risk opportunity, and then looking through the and then to look for a significant move to the downside, back into the lower 90s and then back into the 80s, right? So it's about the wall holding, and if the wall is holding, then there's no reason why not to be looking for further downside on the instrument. If she pushes higher, then the next area to be looking at is going to be the underside of that wall there, right? So these are technical levels. Mr. Black Cat refusing to believe the bear move is over on the Aussie. Is that based on technicals or other factors? Please elaborate, right? So it's technicals. If you're looking at the instrument and you're saying, all right, what's happening on the instrument right now? What's happening on the instrument? Is the instrument rising or is the instrument falling? The question that you've got to ask in order to determine that is just where is the nearest support or where is the nearest resistance? That's the only question that you need to ask. As far as the nearest support and resistance is concerned, that makes all of this price action on the left-hand side irrelevant. The only thing I'm interested in is the current wave, right? So that wave has been a bearish wave. We're getting a pullback now, and the nearest resistance that I have is being defined by the walls which I have drawn. So long as the price remains below these walls, I would consider the bearish. I would consider the bearish wave to be intact, or I would consider a bearish bias to be intact. If it happens that the price ends up breaking up through that, at that point, I would consider the bears to be no longer in charge, and I would consider the bulls to have taken charge at that point, right? So it's very much a technical play. And I'm always looking for a continuation in momentum rather than a reversal in momentum. And then it just becomes a case of how you define the level at which you establish bias, right? So for that, in this particular instance, I'm using some trend walls in order to define that bias. And locally, these are the levels which I have. So yeah, I'm likely to believe that the instrument is going to be lower. If for any reason, because I'm going to be playing short, right? So is there a better reason for wanting to imagine her back in the 80s, right? Other than that, I'm going to be selling the bugger, right? So yeah, right. That is there a better reason than that? Fundamentals, fundamentals. That's what I say, right? Fundamentals, fundamentals. Fundamentals are good for entertainment. I do follow them, but all of my trades tend to be chosen because of a technical bias rather than a fundamental bias, or rather, if I'm taking an entry, it's going to be a technical entry, regardless of what the fundamentals are saying, right? So that's the Aussie dollar. If I'm going to be doing anything at those walls, I'm going to be shorting, right? I can't buy that wall. The only way I can buy the wall is if the price were to clearly break through it. Then you'd say, well, if that's a resistance wall, then on a pullback, you'd very much suspect that it's going to turn into support, right? That's the only reason that I could ever have for buying it. Otherwise, I choose to short the underside until my bias has been clearly invalidated on this particular instrument. Okay, and that's the Aussie dollar. What else am I looking at the beginning of this week? There's the Euro JPY. Euro JPY is looking something like this. Okay, so again, a very clean support resistance wall on the Euro JPY. And in fact, it probably makes a good example of bias, right? So as far as trade is concerned, you'd say, there's a structural support here at 36.80, right? So if you're looking at following the bullish move on this instrument, right, you'd say, well, look, there's a structural support here at 36.80. So long as the price remains above 36.80, then we would consider the bullish momentum to be intact. As far as a technical play is concerned, I think I've got a nice trend wall here, and I would be very much interested in selling the underside of that trend wall. So if the price reaches there, I would look for a shorting opportunity. She's held on 2 previous occasions. No reason why she can't hold on a third. The third time she goes to that wall, I would expect for the price to give a little wobble, right? I'd expect it to give a little wobble before she collapses. I like that term wobble. I was introduced to it by Roland. I'm just going to check if he's in the room. Roland, are you here? No? All right, can't see you, right? But you might expect a little bit of a wobble, right, when she next hits that wall. But I would expect the wall to hold. Certainly, I'd be looking for a reaction on the underside of that particular wall, right? So Euro JPY, it's a trend wall. That's how you've got to connect it between support and resistance. And we're going to look for that wall to hold the price and contain the bearish momentum. Again, if it happens that the price breaks up through that wall, at that point you consider any bearish bias that you have on the Euro JPY to be invalidated. She is bouncing off quite a strong structural support area. You've got to kind of zoom out and go maybe to a H4 time frame. You can see that here. The last time she was there was back in February. Right, so there is cause. We're getting quite a strong bounce there. There is cause for that. Right? There is cause for that. So it might happen that from here you end up getting a significant push north. It might happen that it ends up playing out like that. And I do have actually a suspicion that maybe before the end of the year, we're going to see the Euro JPY back at the 145 price handle. I think it is something that I've mentioned here before on this forum. There is a suspicion. But until we get a structural change in the price action, right? So, if we're looking at the moment, what we're seeing is support turns into resistance. You've got support, and support turns into resistance. Once we start seeing resistance being breached, we'll start seeing resistance turn into support, right? And we see resistance breached, and resistance turns into support. That's what an uptrend looks like, right? And that is what a downtrend looks like. So until we get that flip in the direction of the price, we're going to continue to look for bearish setups on this particular instrument, even if she's bounced off a particularly strong structural support area on a wider time frame. In the near term, we're considering the bearish momentum to be intact, and we would consider the bearish momentum to be intact so long as, I guess, the price is remaining structurally below this price handle. That's coming in around, 37.60 or something like that. But a strong breach through 37.60, maybe a push into 38 on a pullback. At that point, you might become interested in starting to buy this particular instrument, right? So we want to see a structural change in the price action before we start looking for the bullish setups. So in the near term, I'm quite happy to chart it for the shorts, and the next strike on the underside of that wall, I'd be quite happy to look for a shorting opportunity given the chance to do so, right? That's the Euro JPY. What else do we want to take a look at? CAD CHF. All right, CAD CHF. Right, so this is CAD CHF. There's a flag wall here. That's a flag structure, right? The flag broke down. So there's a flag wall here, and extends something like this, right? So again, what we're looking at is the current wave. It's a bearish wave, and what we're getting here for all intents and purposes is a pullback. So any pullback into that flag wall, and I'll be looking to take the technical shorts. Again, if the price ends up pushing through it, at that point you would consider the bearish momentum to have become invalidated, right? So it's Canadian CHF. Again, it's something which is near term. You need to do some measuring here with the Canadian CHF. The last few times she's hit the underside of the flag wall, she's given a reaction anywhere between 30 and 60 pips. And so when you go and hit the underside of that wall, you're going to be looking for a similar size kind of reaction, right? Anywhere between 30 and 60 odd pips, and take the profit when it's there. The true range on this instrument has been reduced a lot. Volatility is very low on this instrument. She doesn't have a massive true range right now. Like I said, take the money when it's there. If you do enter into this trade, your stop doesn't need to be anything bigger than 25 odd pips from the price at which she strikes the underside of that wall. All right, that's the Canadian CHF. Okay, I think those are the ones which I'm looking at the beginning of this week. Really, it's only a handful of pairs. We are in the middle of the month, and I'm happy with the stuff that makes a clean read rather than something where you have to use your imagination to find a line or a level. Let's look at what some of you guys want to take a look. Let's see. USD CHF, Euro GBP, and gold. All right, so let's take a look at the dollar Swiss. Okay, dollar Swiss, there's an inverse correlation between the dollar Swiss and the Euro USD. Who doesn't know that? So you have to choose, really. All right, you're going to trade the dollar Swiss or you're going to trade the Euro USD. Don't take exposure to both at the same time, particularly if the exposure is in the same direction. As far as structure is concerned, the key level that I've been looking at for the dollar Swiss is the 89 price handle, right? Okay, that's your yearly open price. And the only thing to note about dollar Swiss is that she hasn't strayed very far from it all year. She's been, maybe a couple of hundred pips above that level and a couple of hundred pips below that level. She hasn't strayed very far. So for all intents and purposes, if you're looking for new yearly highs on this instrument or new yearly lows on the instrument, there has to be an element of caution, right? It's just, look at the information that the price is giving you. Look at what the price is telling you and make a rational, sensible determination on the back of that, right? So what's the price telling you right now? It's saying, why in your right mind would you want to be initiating a trade on this particular instrument? That's the dollar Swiss charted for me. You can see I've got a bunch of lines on there, but there's nothing there which is registering. It just doesn't look as though the volatility is there. If you're taking it from a purely structural point of view, you're going to do something like this, right? You're going to say, well, here's the nearest support. In fact, you might even be marking that cluster which has just been breached. And you're going to say, so long as the price is above that level, I'm going to look for bullish continuation. If the price is breaking down and a pullback, and I'm going to look for that support to become resistance, right? That's how you play the nearest SR on the dollar Swiss. But like I said, she's not exciting me right now. So I've chosen to sit aside on this particular pair. I'm not really positioning anything for it. Euro GBP, I do have some interest, right? So Euro GBP, I think that we may be in the early stages of a reversal on this particular instrument. I do have reason for believing that. And what we're looking at is, what I look for is really 79.60. All right, so I'm wondering if we're getting some kind of rounding structure going on here, right? So a rounding structure, the price does something like this. Right, there's the rounding. Right, she does something like that. So you're getting lower lows, and then all of a sudden you start getting higher lows, and then the price changes direction and does a reversal and makes a break higher. Okay, I think that we're getting some kind of rounding structure here on Euro GBP. My suspicion is very much that the instrument is going to break higher, right? So if you're looking for symmetry on the instrument, you might see something like this. Right, so you might see something like this, right? So there's the flag there, here's the flag in the opposite direction, and then the price ends up breaking higher. So that's what I'm imagining for the Euro GBP. As far as technicals are concerned, or as far as entry is concerned, I think that the bullish bias would be invalidated. I think you can probably mark a wall, right? So you can mark your wall something like this. Maybe even fan that out a little bit, right? And here, so we have support 79.20. It's about 79 price handle. I think so long as the price remains now above the 79 price handle, then I would consider the bullish momentum intact. A break below the 79 price handle, and you're going to get strong continuation to the downside. Next stop will be 73. All right, so she's at this kind of do or die price area. Considering the price action, I think that there's a lot of room to the upside. We could very well come back to this in a few months' time, and she's back at 88, right? So there is potential here that we're looking at the end of the bearish wave, but it's still very much early days. I'm happy to buy dips so long as the price does not break below the 79 handle. So if I'm placing stops, it would be 78, 80-ish. What I'm not happy doing is taking a trade with 100 pip stop loss. All right, so hold your horses a little bit just yet, but if you're getting a dip down to 79.30 area, around there, I might well become interested. All right, so Euro GBP, yeah, I think it's one to be looking at, just not near a level where I'd be taking a trade entry just yet. I think that there is further upside on this instrument. There is room there, certainly for a push back towards or into the 82, 83 price handle in any case. Okay. Why is the yearly open significant? The yearly open is significant because it defines the direction of the year, right? So I follow momentum, and quite often you see a lot of commentators talking about market sentiment, and they'd be looking at Euro GBP right now and saying, there's a strong bearish sentiment on Euro GBP, and they'd be linking that to some fundamental cause. They'd be saying, deflationary pressures in the Eurozone. I don't actually believe in deflation, right? I don't think there's any deflation in the Eurozone. But I'm wacko like that, and it doesn't really matter what I believe fundamentally because I don't trade fundamentals. So, anytime anyone says there's deflation, I'd like to take the other side of the argument and say, there's deflationary pressure in the Eurozone, therefore the euro is going to fall further and it's going to collapse in value. Why would deflation cause a currency to devalue? Deflation increases the buying power of a currency, all right? And isn't that what we saw happen with the US dollar during the GFC, during the Great Financial Crisis, right? So back in 2008, when there was that whole thing about depression and deflationary pressures, XYZ, the market response was a huge valuation in the US dollar in response to that deflationary pressure. So if we're going to have deflation in the Eurozone, I actually believe that is going to raise the value of the euro rather than to cause a collapse in the value of the euro. But like I said, that's just me. If we're going to play, we're going to play the technicals, right? But you want to measure sentiment. The best way to measure sentiment is just to look at the direction of the year and to look at the direction of the quarter and look at the direction of the month and look at the direction of the week. And that is everything that you need to know about the market sentiment at any given point, right? So if it's a down year, then that's a reflection of market sentiment. And if it's a down month, that reflects market sentiment. And if it's a down week, that reflects market sentiment. And if the direction of the week changes or the direction of the month changes, that demonstrates a shift in the market sentiment without ever having to look at an economic calendar, right? You don't need to look at an economic calendar to know that the market sentiment has shifted. You just look at the direction of the price in relation to any of these levels. So if you're ever looking at my chart, let me just adjust the color scheme for you. You might be able to see it a little bit clearer on my chart now, but the levels which I have marked on my chart, there's the yearly open for this instrument. Here is the weekly open. Here is the quarter. Here is the month. And I'll mark the daily open as well, right? But it's all you need. It's all you need to determine sentiment, right? So I have all of those levels marked on my chart, and it's the only indicator which I use, right? It's just the proximity of price to those levels. Okay. Can you use the same thesis for monthly open, weekly open? Yep, you can, absolutely. Why not to? What about interest rate differentials between the UK and Europe, right? So I think interest rates, they affect the market hugely, and that swap differential between the currencies is the biggest reason why an investor would choose to invest in one currency over another currency. Often it will cause a valuation or an overvaluation in one currency over another currency, but remember, carry trades unwind as well, right? So, if you're looking at the yen process, let's go back. Right? What is all this about? What is all this about over here? Right? Okay. And what's going on over here? Right? So, here you can say, okay, carry. Right? This is all carry trade. Right? But what's going on over here from 2012? Right? So, carry is important, but carry also unwinds, right? It unwinds. It's been particularly strong on the Kiwi dollar, right? But if you're looking at NZD-JPY as well, right? So, but huge carry trade there, right? But you can also see that the carry trade unwinds, right? So you're not always going to get secular moves in the market. You're not always going to get a move unilaterally in a single direction. Carry trades do unwind. So they are important, but if you want to make money, you got to trade technicals, right? Yeah, you can be aware that there's a significant carry, or if you're going to be taking the opposite side of that, there's going to be a significant transaction cost. But in the short term, we're not looking to make money by picking up on the swap differential. We're looking to make money in actual price movement, right? And for that, you need to use technically defined levels and take an entry at a price where you believe that the price is going to move away from that. Okay, so all right. We're getting a request for gold. Okay, you'll see the gold chart is not even marked on my screen. All right, let's find it. Okay, XAUUSD. Change it to a color scheme. That works for me. All right. So if you want to measure sentiment on gold, we're still up on the year. Right? Okay. How far up on the year? So where's that? 1,200. So it's $100 up on the year, right? Not the. And I think by and large we've just been looking at a sideways move, right? That's what you're getting on this instrument. So I'm not a big gold trader. I'm not big on gold. I used to be at one time, a very, very long time ago. If we ever have time, I'll sit down one day and tell you about my history with gold. It will bring tears to your eyes. There's joy and there's pain when it comes to gold. But look, you're just getting a kind of sideways move there. Like I said, I'm not a very big gold trader, but if you're looking at sentiment, you're up on the year. And unless the yearly direction turns bearish, there wouldn't really be a reason for selling it. In the near term, I'm not looking to position on it, right? I think the last time I looked at positioning on gold, we were selling it, and she was up in the 1700s. And since that time, I haven't made a call on gold, right? So, at some point, I'm going to start believing that that the bulls are going to kick back in and I'll become a buyer, or I'll start believing that there's still significant room to the downside and I'll become a seller. But right now, from a structural point of view, I think it's better left alone. If you're buying, she goes up and then she comes back down, right? And stops you out. What's the point? So wait for the momentum to develop. And once the momentum develops, at that point, you can start getting involved with a clearer conscience, I guess. Okay, folks, I think that's it. We've run out of questions too. Thank you very much, all of you, for attending this week. I hope you enjoyed the presentation. If you like what you've heard and you want to hear more of it, check out my website. It's www.wmdforex.com. I publish my trade notes weekly and trade alerts on my website. You're welcome to subscribe to that service. Let's have a look. There's my website there. There is at the moment it's normally an annual subscription, but I've got something up there. If you want to take a 1 month trial, you can take a 1 month trial. We've got that membership package available to you. I'll be back here in a couple of weeks' time. It'll be now in September. I think it'll be the first week of September. So Monday, the 1st of September, I'll be back. But the kind folks at FX Street, I'm sure, will be sending you out an email reminder just to let you know. Until then, trade well and trade safe. And I'll see you all the next time. Cheers, fellas. Bye.